Welcome to the fourth episode of Small Business 101. Today we will cover the importance of bookkeeping for your business and how you can easily set it up so you can keep your finances organized. Let's get started. Bookkeeping is the process of recording, organizing, and analyzing your business's financial transactions. This is essential for any small business owner as it helps you track your income and expenses, manage your cash flow and budget, prepare your tax returns and financial statements, monitor your business performance and profitability, and make informed business decisions and future plans. But before you can set up a proper bookkeeping system, you must first understand some of the basic terms in finance. Let's take a closer look at what you need to know. To determine your financial performance, tracking income and expenses is crucial. Income refers to the money your business earns from selling goods or services to customers, while expenses include the money spent on operational, production, and marketing costs. Another important aspect is assets, such as cash, stocks, patents, machinery, real estate, or anything your business owns that can generate future economic benefits. In contrast, liabilities are obligations or debts your business owes to external parties. These come in the form of accounts payable, loans, and mortgages. Equity is the ownership of your business's assets after deducting its liabilities and is usually split into two parts. Number one is owner's equity, representing the money the business owners or shareholders invested. And number two is retained earnings, which are the cumulative profits or losses of your business after paying dividends to shareholders. Okay, now that you understand common financial terms, let's discuss the basics of setting up your bookkeeping system. Choosing the right software can significantly impact your bookkeeping process's accuracy, efficiency, and security. Since there are a lot of finance software options out there, you should take into account the size and complexity of your business. Initially, using free and simple tools like Google Sheets should do the trick. However, when your business grows, you might need more advanced bookkeeping software to handle multiple accounts, currencies, and taxes. Another factor to consider is your budget. Bookkeeping software can vary in price depending on the features, functions, and support they offer. Open source apps are usually free, while others require a subscription fee. Compare the costs and benefits of different bookkeeping software options and pick the one that suits your financial capabilities. And since your bookkeeping software stores and processes sensitive financial information, double-check its security and reliability features. Look for dedicated tools for data encryption, backup, recovery, audit trail, and user access control. Pay attention to the software provider's reputation and see how they tend to handle issues like data breaches, downtime, or bugs. Keeping these factors in mind, here are some bookkeeping apps you can try. Wave is a cloud-based bookkeeping software that lets you control every aspect of your financial operations. These include tracking income and expenses, creating invoices and receipts, as well as generating financial reports. The only downside is that you must pay a subscription fee to use its payroll and payment processing features. If you're looking for a free tool, Newcash is an excellent choice. This tool allows you to manage your bank accounts, monitor stocks, track financial records, and more. ZipBooks is another popular choice among small businesses. This is mainly because it offers a free plan with an unlimited number of users, customers, and vendors. You need to buy its premium plan to unlock advanced features like bank reconciliation, time tracking, or smart tagging. Small business owners often make the mistake of using one bank account for their personal and business finances. The thing is, this practice makes it difficult to keep track of your business financial health. By opening a separate business account, you can easily monitor cash flow, profits, and losses related to your business activities. It also makes you appear more professional and credible to customers, suppliers, and investors. To streamline finance tracking even more, consider obtaining a business credit card. It usually provides monthly statements with all your business transactions, making tax filing less complicated. Using business credit card responsibly can also help build your credit score. This can be valuable for securing investments or bank loans down the line. Opening a business bank account is one of the many effective ways to manage your finances. The next important step is to create a spreadsheet for budgeting, expense tracking, cash flow management, and financial planning. When organizing your spreadsheet, use names that make sense for your sheets, tabs, categories, and transactions. This simplifies data retrieval in your spreadsheet no matter how intricate it gets. Use colors, formatting, and sorting to highlight and arrange your data. Another tip is to prevent typos and errors from messing up your data. Don't worry, popular tools like Microsoft Excel and Google Sheets have built-in data validation and error checking features. And finally, review and update your spreadsheet regularly to keep your data up to date and relevant. A well-organized bookkeeping system can save you from the hassle and expense of correcting errors later on, as well as from potential tax problems. So, while creating and maintaining an organized bookkeeping spreadsheet can be a tedious task, the long-term benefits of having accurate and up-to-date financial records far outweigh the initial efforts. Trust me, you'll be very glad you built this habit early on. Okay, now let's move on and discuss key aspects of setting up your business finances. First up, let's talk about creating a budget that will serve as a roadmap for your business. It will help you allocate resources wisely and avoid overspending. To begin, start by setting your financial goals. Do you want to increase your revenue within the next 5 years? Or maybe you're looking to cut down your expenses by 30%. Having specific, measurable, and time-bound goals will give you the needed direction and motivation to stay on track. Alright, now that you have your financial goals in place, it's time to move on to the practical steps of budgeting. Begin by listing your sources of income, which may include product sales, service fees, or even stock dividends. Next, identify your expenses and categorize them into two types: fixed and variable. Fixed expenses like rent and salaries stay the same from month to month. Meanwhile, variable expenses fluctuate based on your business's activity, including raw material costs, utility bills, or marketing expenses. After that, adjust your strategy accordingly. For example, increasing your income can be done by raising prices, expanding your market, and adding new products or services. On the other hand, trimming unnecessary expenses, negotiating better deals, or boosting efficiency can help reduce costs. Once your business is up and running, adjust your budget based on the actual results, evolving markets, or new opportunities. And don't forget to keep track of your cash flow to see whether your business is making or losing money. To calculate your profit or loss, follow this simple formula. Profit or loss equals income minus expenses. If your income exceeds your expenses, you have a profit. In contrast, you're in the loss zone if your income is less than your expenses. If your small business is profitable, it's a good idea to save some on emergency funds to prepare for the unexpected. Set up a separate savings account for emergencies and put aside a small amount each month, for example, 10% of your income. Gradually increase the amount as your business earns more. Last but not least, review and analyze your financial data regularly so you can confidently make business decisions. To make such analysis easier, generate monthly financial reports, including your income, expenses, and cash flow for each month. After that, study these reports to see where your business stands in terms of income and expenses compared to what you initially projected. This will help you identify discrepancies between your budget and actual outcomes. With insights from your financial reports, you can make strategic adjustments. For example, if you consistently exceed your budget in one category, consider cutting expenses or relocating resources. On the other hand, if you notice an area with consistent growth, you can explore more ways to capitalize on that success. Now that you have a basic understanding of the process, you can start tracking your income and expenses with ease. With a little discipline and consistency, you can keep your business finances in check and make informed decisions for the future. As it turns out, managing your business finances isn't as complicated as it sounds. And now it's time to put your newfound knowledge to the test. Remember, bookkeeping doesn't have to be complicated. With a little effort, you can keep your business finances organized and stress-free. If you want more helpful tips on how to start a small business, remember to leave us a like and hit that subscribe button and notification bell, as we still have a couple of exciting episodes in the series coming your way. Thank you for watching, and I'll see you in the next video.